Listen up, everyone. Warren Buffett, the Oracle of Omaha, the guy everyone looks to for financial wisdom, is making moves. And let me tell you, they're big moves. Buffett's Berkshire Hathaway is sitting on over $300 billion in cash. Yeah, billion with a B. But why is he hoarding cash like it's going out of style? And should you be doing the same? Well, let's break it down. First off, Buffett isn't exactly panic selling because he thinks the economy's doomed or something. The man's been around long enough to know that timing the market is a fool's game. Instead, he's trimming his portfolio, selling massive chunks of Apple, Bank of America, and other stocks. Not because these companies are bad, but because he thinks they're overpriced. In other words, he's saying, this market is inflated, and I'm not paying these premiums. Now, here's the kicker. Buffett isn't reinvesting that cash into new stocks or even into his own company's shares, which he's historically loved to buy back. Nope, he's sitting tight. Why? Because he thinks there just aren't enough good deals out there right now. That's wild when you consider that this is the same guy who famously said, "Be greedy when others are fearful." But here's where it gets even more interesting. Buffett's also worried about something a lot of people aren't talking about: taxes. He's hinted that capital gains taxes are likely to rise soon, and he's cashing out while the tax rates are still in his favor. Smart move, right? Now, let's talk about what this means for you. Holding cash might feel like a safe bet right now, especially if the market takes a nosedive, but there's a catch. Cash loses value over time thanks to inflation. So if you're just sitting on your money and not investing it, you're basically letting it shrink. And let's be real, none of us are Warren Buffett with hundreds of billions to play with. So then, here's what you should consider. Are you saving for something specific in the short term, like a down payment or an emergency fund? Then cool, keep that cash liquid. But if you've got money sitting around with no purpose, think about putting it to work. Stocks, bonds, real assets, whatever fits your goals and risk tolerance. Just don't let fear keep you from making moves. And let's address the elephant in the room, the Buffett Indicator. It's a measure of how overvalued the stock market is compared to the economy. Right now, that indicator is flashing red. Like, .com bubble red. Buffett himself has called it a warning sign in the past, and here we are again. So then, what's the play? For most of us, it's sticking to the basics. Regular investments in a low-cost S&P 500 index fund, for example. Over time, that strategy tends to win. If the market dips, you're buying at a discount. If it doesn't, you're still growing your portfolio. But you've got to have the stomach for those ups and downs. To sum it all up, Buffett's cash pile is a sign, but it's not necessarily a signal for you to follow suit blindly. Understand your financial goals, assess your risk tolerance, and don't let headlines make your decisions for you. All right, folks, that's the scoop. If this got you thinking, or maybe even rethinking what you're doing with your money, hit that subscribe button and share your thoughts in the comments. Let's keep the conversation going. And hey, don't forget, your financial future isn't about what Warren Buffett is doing. It's about what you are doing. So, see you in the next video.